All right, perfect. All right, extra live stream for the, what was the name? Context. For the context video yesterday. I wanted to go over the dollar right here. And I wanted to go over situations where we initially don't really have the perfect context to go into the lower time frame, or I don't necessarily like the lower time frame. What do we do in situations like that? So what do I mean with that? I mentioned yesterday in the video that if we want to continue higher, we can look to potentially continue higher off of this fair value area right there. It's in combination as well with daily value right there. So that in itself could be a nice area to go into the lower time frame to look for a potential entry. But oftentimes, and I would say, actually, what is it? 7 out of 10 times, I don't go into the lower time frame immediately. I wait for more. And what I mean by that is if you don't initially get nicest context, or the lower time frame is not that nice and it just doesn't fit your overall requirements, then what I always mention is, when in doubt, wait for another fair value gap. And for example, here on the 4 hour, if I wanted to get involved on lower time frame right now, I would not be scouting at a lower time frame entry right here. I would wait for the 4 hour to create a 4 hour value gap higher right there, or even the 1 hour, to then create new context to then dive into the lower time frame right there. So within the different context, like we mentioned as well with the Australian dollar US dollar example yesterday, within a different context, you can wait for more context as well. Similar to Australian dollar US dollar or EU right here, if you're not too sure or you're not too convinced on if AU right here wants to continue lower already off that daily value gap, because, well, realistically seen right there, the retracement is a little bit odd. It's a little bit of an odd retracement right there that we get already before we reach those lows. So here, if you're not too sure if we still want to continue lower, perfect. Don't take this context right there. Take this context right there. The way I see context for me, and the boundary always needs to be almost perfect for me to go into the lower time frame. I don't want to have any doubts that it might do something else than continue lower right there. Where Australian dollar US dollar, I might have a doubt that this gets disrespected to continue higher a little bit, or at least have a deeper retracement into that fair value gap. So in this case, I would not want to go into the 15 minutes to look for an entry. I would want more confirmation, more context to continue lower instead right there with a new fair value gap right there. That is what I would personally want to wait for. I think that's really important as well, especially when we have talked about in the previous videos how far we can retrace, etc., and knowing when to look for the right context as well, knowing when to go into the low time frame to look for an entry. It's very important. It's crucial. All right, let's see right here if we have a few more examples. If there are any questions, then please feel free to let me know. Could you go over and give example of how to draw out the whole fair value area? For sure. So fair value areas is essentially on the higher time frame right here. For example, it's this order block is a fair value area right there. I like to look at fair value areas on the lower time frame because it gives me a little bit more things to work with. Where here, for example, the fair value area I would personally take a look at. Yes, we have an order block right there, which we can definitely continue lower from. 100%, that is also a fair value area right there. I'd argue the bigger fair value area is this right here with the bodies, because the wicks right there is not overlapping currently. So that would be my bigger fair value area sitting right there, which we can personally or perfectly still find come into to then continue lower off of that. Let's look at some more as well. Let's look at Bitcoin as well, because Bitcoin failed to follow through lower right there. Let's look what new fair value areas we actually had right here. So I mentioned this fair value area right there. Essentially, I try to make it as objective as I can with as well market structure, because it's essentially just a move from an intermediate term low to an intermediate term high right there. So it's an intermediate term low right there towards an intermediate term high, which creates a fair value area once we move either below the intermediate term low or above the intermediate term high. This creates a new intermediate term low right there, which I've already marked out, and this intermediate term high right there. Then this again is a new fair value area as well right here. Now I'm just looking at, all right, are the wicks overlapping with an exact fair value gap? No. Okay, then I mark out the bodies instead right there. Then I use this instead. And coming into this fair value area, we have also created some, we could argue, lower time frame fair value areas right there. Also this one sitting right there, which we can then continue lower from. So right here, if we dive into the specifics, then we have an intermediate high actually getting confirmed right there. This was very interesting price action, by the way, to study as well. Because right here, first signs that we, and this is what I mentioned actually with Australian dollar, US dollar, the difference between this coming below that low with that fair value gap and the difference between this low right here, it can both still continue lower. But the first example that we have right there is a lot higher probability to continue lower than this one. So in a scenario where this happens, I would want more confirmation on the lower time frame right here, arguably more context and another context to then go into the lower time frame to then actually look for an entry, where here I would dive straight into the 1 minute with that retracement. So it's a difference in context right there. There's high probability context, there's low probability context. If we have low probability context, I still want to wait for more context as well. So here we have the 2 candle rejection sitting right there, which fails as well. And when this fails, that essentially creates a dominant effect because now we have mitigated everything. So that also creates then a new fair value area sitting right here again. Fair value area. And I'm quite loose with my fair value area. So I try to define them more with intermediate highs, intermediate lows as well. But I'm quite loose with them. And what I mean with that is, for me, it's an up move. Up move doesn't have to be a perfect 1 leg higher right there. It can be a whole up move right there. Then we have down moves right there where that can be order flow legs continuing lower for a little bit right there. It doesn't have to be one singular leg. That creates a fair value area right there. So this, for example, right here is a fair value area, which is also known as a mitigation block right there. So order block fair value areas are arguably a little bit easier to understand. For example, this one here is simply an order block. And I can understand if people find it easier to focus on that because order blocks are just a little bit easier to spot than mitigation blocks in itself. So if we want to continue higher, then we have this fair value area right there, which we can still potentially retrace to. Eventually, we already continue higher. Now, this is where we have to take into account the different time frames as well. Because right now, we've also created this fair value area right there. So inside the bigger fair value area that's being created, we have fair value areas delivering towards the higher time frame fair value area. It's essentially the same as we have an intermediate term low right there, and on the lower time frame we have short-term ranges delivering towards the new intermediate term high that we are about to take. So if we want to continue higher, we have that fair value area right there. Will we retrace that far? That then becomes a question. Where right here, we can mark it a little bit higher. We can already potentially continue higher towards this high right there, instead of delivering towards the fair value area, because we are in quite a hurry right there, if that makes sense. Would love to see a couple more 2 candles reversal setups examples. For sure. I also wanted to go over some of unusual context setups as well, where here on gold was a really good one actually. I personally missed it right here. But if we take a look at this right here. So again, when I mention if we create an intermediate term high right there and we are not offering fair value anymore, and we might be seeking liquidity. That, of course, is probabilities. So is it guaranteed to happen? Absolutely not. Most of it, I would argue, a lot of the time it does not happen because we need to react still to price action. We need to still demand most of price action that it actually is going to do that. And what I mean with that is, for example, if we take a look at dollar right here, we confirm that intermediate high at the top. So we might be saying, all right, this is a confirmed sweep to actually continue lower, which I also mentioned at that time. Now, right here, where it gets suspicious is where we fail to create a new fair value gap going lower right there. So this essentially, what we went over yesterday, once we trace back into that, and we even have a fair value going higher at that moment in time, that creates unusual context to actually continue higher instead. So that becomes very suspicious to actually continue lower. Do you have to take those trades? No, you can simply wait, right? You can simply wait, because if we are going to continue higher, we will see a rejection like this, like we're currently seeing, to then have new context to then continue higher off of that instead as well. So that is quite important to understand. Let's see if we have a few more 2 candle rejections as well. Let's see. 2 candle reverse setups / examples for sure. So essentially they happen everywhere, which is quite interesting. For example, but I will go over a few where it now starts to fill. So for example, here on gold, if we want to continue lower right now, then we have 4 hour context taken. So in the previous video, I also mentioned if 4 hour context taken or any time frame context taken, ideally you want to go down a singular time frame to find new context. Unless you have context again on the same time frame or on the time frame above it, it's a little bit of a different story. But right here, context taken, so we can go down a time frame where the only place we can still continue lower from is this 1 hour value gap right there. Now let's look at this scenario. The first candle, I would argue, is already a rejection right there to potentially continue lower. So the next candle, I would want to see a down candle. Now, the reason why I mention it can still somewhat sweep this high right there to then continue lower is because it tends to do that sometimes. Same as on Russell. If we look at that example on the weekly right here, we come into this weekly order block right there, weekly value gap. It's already quite a big rejection, I would argue, but we still have the next candle as well coming below it to then continue higher. So that really depends on what the lower time frame is actually doing. If we have fair value gaps, etc., telling us a certain story. Now, going back to gold, right here, if we go into the 1 hour again. But the thing is, if we do sweep that again, I would be more suspicious that we might actually want to continue higher. So first things first, what I would want to see is a next down candle. This should just, no doubt about it, should be a down candle. If that's not the case, then in the worst case scenario, quote unquote worst case scenario, it can sweep this high right there to then still continue lower. So if there's a closure above this candle right there, that would be extremely suspicious to me. That would be very, very weird, very odd to me. Why would it want to close above that? So even if we get down candles after that, it's still suspicious to me that we did not actually deliver on that 2 candle rejection right there. So if we then take it into account, again, because this is already failing and this was the area essentially where we could continue lower from, I would not necessarily look at shorts right here, but of course we can look at the resistance as well. Here's the same, where the first candle that comes into it is already a rejection right there. So the next candle should arguably just be a down candle. If that's not a down candle, worst case scenario, we can sweep that high again to then continue lower off of that. What do we see? We see again a closure above that candle. So even though we get a down candle right there, that down candle in itself is not interesting to me anymore. So that down candle is more so as a retracement to see that we actually want to continue higher instead. Right there. And let's actually see. Let's look at this 50 minutes. Do we have anything to work with right there? Which could be interesting. No, it's just one huge move higher. Let's see. What about New Zealand dollar, US dollar? Let's see. Most of the questions I'm going to go over as well in a more advanced section. Can you use short-term ranges as fair value area since you said only use intermediate-term range as fair value area? Yeah, you can use short-term ranges. For example, the one we saw on Bitcoin, where this is on the 1 hour, these are intermediate-term ranges right there, but we have short-term ranges delivering towards the bigger intermediate-term high. So yeah, you can definitely do that, 100%, 100%. There's an order block, etc. It just really depends on which time frame you're looking at, because all these intermediate-term ranges are short-term ranges on the daily, for example. So it's all relative. Question on ES. Overlapping defense in daily is the breaker. What will prevent the weekly value gap from creating? Would you see that as a low probability for high prices of daily value gap? Yeah, that's actually quite interesting. And it's something we've been studying yesterday. So it's quite new still. But whenever we have reached all-time highs or we have reached a significant high and we don't really have anything to target above it, usually what tends to happen is, and that's a deep work session we have done literally yesterday, what tends to happen is that this weekly value gap right there gets created and the third candle is actually consolidation, and we will actually want to trade back into that weekly value gap right there. Which leads me to believe, to get back to your question, is if we do trade back into that right now, then that leads me to believe that that is not really a good sign if we do want to continue higher. Now, oftentimes you'll hear me mention as well, we can still trade back into that fair value area right there to continue higher off of that. And if we get the nice rejection and we just get good candle signs, 2 candle rejection to continue higher, that's perfectly fine. But the thing is, and this is actually a question as well that we had, which I wanted to go over in a little bit more advanced section. When can we spot a consolidation? No sound.